Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Tony Zhang to discuss if stocks have cleared the hurdles to move higher and option strategies to trade the trends. And Tony, the bulls certainly have something to be thankful this Thanksgiving, with the Dow hitting 30,000 this week, small caps finally participating, and of course, the Nasdaq 100 outperforming all year. So let's review those major averages.
Yeah, so let's start off with the Dow, and I think that's really the milestone that a lot of investors are paying attention to, is the fact that you have large cap value now actually keeping up and actually leading the markets higher, with the Dow reaching that 30,000 level. This is a pretty significant milestone. Markets have paused a little bit at this milestone. So right now, I think investors are trying to decide whether markets can continue moving higher. But if we look at it on the balance of what we've contended with over the past couple of months, as equities largely have been moving sideways, we've really cleared quite a few hurdles here over just the past couple of weeks, with both the Pfizer and Moderna vaccine having fairly strong clinical trial results that lead us to believe that we're going to see emergency use in the next few weeks. And then just earlier this week, where we had the Trump administration allow the transition of power over to Biden, that clears another hurdle from the election that has been a bit of an overhang here for the broader markets. So if you look at the fact that Dow is near that 30,000 level, if we look at IWM, which is small caps, also leading this market higher, these are the signs that we typically look for a healthy market equity rally. So, on the balance, what we're starting to see in more green shoots from the equity markets. Corporate profits are starting to keep up here, and what we really have seen is a part of the market that has lagged behind for quite a few years now, and that's small caps and value, playing this catch up during, as these hurdles are cleared, playing catch up. And then when you look at the Nasdaq 100, which has largely led this market from the March lows, outperforming the S&P, the Dow by leaps and bounds, actually falling behind here. Now, I do think that this rotation into value, while fairly strong here in the last couple of weeks, I don't necessarily know that that's going to continue very strongly going into 2021. I do expect over the next couple of months, we might still see a little bit of weakness here from the equity markets, because we do have this fairly strong rise in COVID cases. That's going to provide a bit of a pause here on equities over the next couple of months. But as we get into the beginning of next year, as the vaccine starts to as we start to see distribution of the vaccine, potentially another stimulus bill with the Biden administration, that is really where I think equity markets can spark a much broader rally here across the board.
And of course, Tony, we have to mention Bitcoin hitting 19,500 today in just one day. It went from a low of 18,641 to 19,500, although we're at about 0.4% up as we speak. It's up 8% for the week, 45% for the month, 168% for the year. But it's this last month, Bitcoin has been a beast with headline after headline on mass adoption. What are your thoughts?
Yeah, I remember we were actually on Trade Talks in 2017 talking about Bitcoin as we were seeing that first rise to 20,000. But this time is a little different, even though the recent rise that we have seen over the past couple of weeks certainly feels very similar to the rise that we saw the first time up to that 20,000 level. But this time was definitely far less in terms of retail participation. We certainly started to see more on the institutional side participating on this rally. There was quite a bit of, I would say, lack of supply that drove the recent move from 13,000 to 20,000 to happen so quickly. We were talking about Bitcoin at 13,000 just a few weeks ago, and I was saying to investors that I think we're going to hit 20,000 at some point. I certainly had no idea it was going to move this quickly, but the fact that we're revisiting 19,000, 20,000 again, it's likely going to pull back a bit, in my opinion, in the short run. But when we do get a breakout, and I do expect that we're going to break out above that 20,000 level, that really clears Bitcoin for substantially further upside, in my opinion.
Yeah, it's really interesting. It hit exactly 19,500 and 0 cents. It wasn't even like there was, a couple pennies after that. It was exactly at that 19.5 level. So that's interesting to watch as well. Let's move on to vol. You're saying that there's a new volatility regime. What do you mean by that?
Yeah, so prior to the pandemic, the volatility regime that we were in was fairly muted, if you will, meaning if you look at whether you look at the VIX, meaning the implied volatility S&P 500, or VXN, which is the implied volatility of the Nasdaq 100, we largely were range bound below in the low teens to the low 20s or so. It really ranged between that range, and because there wasn't a lot of uncertainty in the markets, that was justifiable. Once we had the vaccine, once we had the pandemic, all things kind of broke loose, and there was a lot of uncertainty in the markets, and we entered what we consider a different volatility regime, where the low end was actually in the high 20s and the high end was well into the 40s and 50s. But I would argue here, for the same hurdles that we just cleared here over the past couple of weeks with respect to a better understanding of when these vaccines are going to come out and the efficacy of them, the peaceful transfer of power for the US elections, from my perspective, this puts us back towards a volatility regime that we had seen prior to the pandemic. So even though right now, if you look at the VXN at about 25% and the VIX at 22%, relative to the past few months, this has been relatively low. I would argue that because volatility has shifted a bit here over the past couple of weeks, that when volatility is in this 20-25 range, that it's actually going to continue to trade lower here into that high 20s, low high teens level over the next couple of weeks and next couple of months.
Moving along to data, it continues to be mixed, and I think that's what at least investors are grappling with, where we're seeing this incredible move in the market. The Dow, 18,000 at the lows in March to 30,000 now. I mean, that's a 12,000 point move, but it's not necessarily reflective of what we're seeing in economic data.
Exactly. If you look at consumer confidence, there's really been a bit of decoupling here, especially over the last couple of months with consumer confidence and the equity markets. Now, I will say equity markets are forward-looking. Consumer confidence is more of a real-time indicator here. The equity markets try to anticipate what's going to happen here next year, how consumers are going to feel next year. But there's definitely a bit of a decoupling here that we're starting to see here, because consumer spending is by far one of the largest drivers of our U.S. economy. We're starting to see slowdowns in terms of retail sales. A lot of retailers have moved their Black Friday deals towards the beginning of the month. Some, Amazon Prime Day was in October. This really shifts some of the holiday spending to what we normally would see at the end of November and in December towards the beginning of the month. And this, from my perspective, leads me to believe that we're going to see a little bit of weakness going into December and potentially into January before the vaccine starts to be distributed. And if you look at unemployment claims starting to tick up again, and I think this reflects the rising number of COVID cases and just the lockdown nature that some of these states and cities are going back into, and it may continue until January or so. So from my perspective, there is still some concern for equity markets to continue moving higher. We're not quite over the hurdles completely.
Yeah, I would agree with you. And Tony, I would also argue that the retailers have moved it up so early into end of September, beginning of October, because they understand that shipping logistics are going to be quite challenging this year. I've had a number of guests on my show within those businesses that said, if you have not ordered your stuff at least by the end of November, first week of December, it's going to be challenging, because not only are you shipping to your home and shipping to someone else, if you're not seeing them as family, you also have the return process to go through as well. So this is some good advice out there as well. They've moved it ahead for a reason, and that's to get your orders in early. Let's turn to your trades, Tony, this afternoon. Both are bullish, one in tech, one in the banks, employing two different strategies to express more potential upside in the stock. Let's start with Broadcom.
Yeah, I was trying to pick opportunities where they were slightly less sensitive to news with respect to a reopening or lockdown, because there are quite a few bullish stocks here in the markets that we would identify as clear bullish candidates. But as vaccine news continues to come out, those might likely take a bit of a hit here. So we're looking at names like that are more broad, like Broadcom in this particular case, to play for the 5G upgrade cycle. We're really playing into the iPhone 12 upgrade cycle. The fact that we do expect 5G infrastructure spending to be fairly strong under the Biden administration. So Broadcom recently just broke out above a $390 resistance level. This is an all-time high here for this particular stock. So we're looking for continuation higher here for a name here like Broadcom. And the trade strategy that I'm using is particularly suitable for the fact that we're trading at all-time highs from an equities perspective, because when you're trying to chase highs, you want to do so in a way with limited risk, so that if you do get a pullback here, even if it's a short-term pullback that just lasts a couple of weeks, you want to make sure that you're protected and that the risk that you have on the table is relatively small. So the trade structure I'm using is a debit vertical spread, a debit call spread here. And I'm going out to January, giving myself a little bit of time, and I'm buying the 400, 440 call spread here, only costing $10.30 on a $390 stock. So that's risking only about a little over 2.5% of the underlying stock's value to play for upside. And this trade gives you about a 3-to-1 risk to reward ratio. So if you do get this continuation higher, this breakout that we're currently watching here on Broadcom, you get a really nice risk to reward ratio while only risking 2.5% of the underlying stock's value.
All right, and let's move along to Bank of America.
Yeah, we also have a similar play here. And this really comes to the fact that we've had 10-year yields continue to climb on this clear, steady uptrend. We have a steepening rate curve here, which is generally speaking provides a tailwind for banks here. And I think Bank of America, with the recent breakout here above that $28 level, looks fairly constructive here. And we're using a different strategy here for Bank of America because we're trying to take advantage of the fact that despite the fact that volatility is declining, we expect that it's still going to continue to decline. And we found a credit spread here on Bank of America, a put credit spread where we sold the December 31st 29 by 27 put spread. That's a $2 wide credit spread. Normally with a credit spread like this, we're trying to collect about 1/3 of the width, so about 66 cents. But we were here able to actually collect 74 cents. So substantially providing a little bit of an edge here from a probability-based perspective and skewing the risk to reward ratio in our favor. So basically expecting that Bank of America will hold this $29 level. Even if it stays put and doesn't move any higher, you're able to profit from this. Put the probabilities in your favor and actually start selling some volatility in this particular market environment, which I think is suitable based on the shifts that we're starting to see from a volatility perspective.
And Tony, finally, where can Trade Talks viewers find a 30-day free trial of OptionsPlay?
Yeah, so we've put together a free trial that it gives you access to the OptionsPlay tool, where you can find more about market opportunities like the ones that I've just played here, that I just showed here today, and how we would utilize options to play that. And you can sign up for a free 30-day trial at trade.optionsplay.com/trade talks.
All right, Tony, great to see you. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.